Uh, First of all, a heartfelt thanks, Amol.
Yeah,
Agreeing to fly to Delhi, where the AQI is presently better,
right.
and flying all the way from Bombay to do this fireside chat with me. So, before we get into the questions, let me just set a context of what I understand how BFSI sector has been in 2025 because we are almost at the closure. So I think it has been a year of hustle for the BFSI sector with so many regulations being brought in by RBI and many other regulators bringing in the DPDP Act, etc. So it has been a year of extreme hustle. They're trying to cope up with the system. Many call it over regulation. Many call it stabilizing the market and allowing the finer players to flourish. But given that, I am of the view that 2026 should be a breather space for the fintechs, breather space for the BFSI sector as a whole. So, to begin with, let's have a question around macroeconomic outlook 2026. As we move towards 2026, which macroeconomic indicators do you believe CXOs should monitor most closely? Credit growth, inflation behavior, global interest cycles, or domestic consumption trends? Over to you.
Meaningful one, Omkar. It's great to be here. In fact, it's a pleasure. Thanks for the invitation. And I think I have done all the conferences mostly indoors, so it's nice to see the weather and the people enjoying. And I think this is very different for me. Generally, I'm in that seat, so generally I ask questions. But I think to begin with, as there is this famous quote, write something worth reading or do something worth writing. That is the quote by Benjamin Franklin, I guess. That is the situation where we are in. I think we have to define and redefine ourselves when we look at the India story. Uh, Macro looks very promising. Everybody who will look at the high frequency indicators of India will see that, oh, India is the only country, not just the fastest growing economy in the world, but perhaps the only fastest growing economy which will be strongly visible on the global map. Why so? Because inflation is low, GDP is between 6 to 7%, FIIs are quite interested, FDI and FI currently low, but DII has increased. Remember, just before pandemic, we had only 5 crore investors in the market, which reached to 21 crore now. Last year, more than 100 IPOs came. This year, we already crossed 80 IPOs. Only the IPOs which came into BFSI sector finance has raised more than 50,000 crores. 20,000 crore coming into capital market from the retail investors every day. So everybody who will look at this data will say India is the bright spot. And we have seen two largest deals, right? The SMBC from Japan came, invested heavily in Yes Bank. Emirates NBD from Dubai came, invested 60% in RBL Bank. So everything is very good. And everybody will look at these parameters. But I think going ahead, every CXO, every founder should look at and focus on the reality and not just the GDP numbers, not just the inflation, but the rural economy, the consumption, whether rural economy is driven by the real consumption, people are getting jobs or not. I think that will determine the real story. Or is it being happening because of FOMO? The government has also been sponsoring a lot of subsidies or something like that. I think this is what is the real story that every CEO should follow. Another trend I think every leader in the BFSI space should look at is the credit growth. I remember the leading banker just 4 5 years back were telling me, even if leading banks or the banking sector has a growth of 14 to 15%, it's done. It's great because we had also 70. We had seen a growth of even 19-20% of credit growth. But today, despite being capital available at cheaper rate, despite the interest rates are lower, I'm talking about even RBI repo rate, corporates are not borrowing. Industrialists are not coming forward, and the credit growth is not more than 10%. Industry growth is between 7 to 8. IIP number to sabko pata hi hai. So I think we have to look at that data point. Apart from these 2-3 factors, we should look at private capex and the credit growth. I think these are the macro strong economic indicators everyone should look at.
So I can conclude in a way on this issue is we need not worry about the inflation behavior, but we should focus on the credit growth.
Yes.
And of course, as you said, the domestic consumption trends in India has always been in favor. This moves to me a second question, and it also, I would also like to speak about my experience around it. And it's almost going to be a decade. So, as you must be aware, 2016 is when we had the insolvency code coming in. I was fortunate to be a part of the working committee then, was a part of the World Bank delegation to understand how UK operates in space of IBC. And now we are almost at the verge of completing 10 years of insolvency bankruptcy code. And when the insolvency bankruptcy code came in, RBI was much more interventionist, or rather, I would have a point of view as a lawyer that RBI stepped out of his shoes of being a regulator and tried to behave a bit like the bankers, or rather, let's say the nationalized banks, because that's how they pulled out the dirty dozen who were brought in into insolvency, right? So, after a decade now, which has undergone massive digitalization and financial inclusion, and there have been a couple of changes. So, pertaining to that, my question is with recent policy movements, do you expect RBI's stance in 2026 to be more interventionist or smarter enabler for ecosystem, particularly in the digital lending, payments, and emerging fintech models?
I think that's a meaningful question, Omkar. And I come from a literature background. I don't know how I became a finance journalist, but when I read, Shylock, The Merchant of Venice of Shakespeare, I loved that, play a lot. And when I was writing about digital lending that you mentioned, I gave a reference of Shylock and the flesh of pound. Whether the Shylock will get a flesh of pound if, something goes bad with that thing. I think what won't happen is the same story with the digital lending. The fintechs came and they innovated the whole lending space, no doubt about it. But they started giving loans to each and every person who wanted a loan. In fact, the interns working in my team also bought an iPhone. I mean, it's okay, they can, buy an iPhone, but the question is they bought it.
Income level to buy an iPhone.
Yeah, exactly. In fact, I put it this way. You and me were struggling to get loans to buy a house and buy a car. These youngsters were also getting a loan to go on a date.
I was not struggling. I never applied for a loan because I never thought I want to get into loans.
I thought you will say your father was in RBI, so you had an access to the easy capital maybe.
He was the first person to discourage me to take any kind of loans.
Interesting. So the point is, in fact, I kept asking this to a lot of fintech companies who are giving loans left, right, and center to the Gen Zs. कि बस वो बंदा डेट पे जाने के लिए लोन ले रहा है, उसका ब्रेकअप होने के बाद वो रीपेमेंट कैसे करेगा? In fact, the companies came with a new idea that, buy now, pay later. I wrote an article and everyone was unhappy with that. My article was buy now, don't pay later. and that's where,
So I don't know whether you are aware, there is an American company, I'm not able to recollect the name. They have created a buy now, pay later for a marriage which starts 6 years in advance of your marriage. So they help you book the destination, they help you buy the lehenga. So as you rightly said, at least you break up in a dating is okay. But what happens if you end up in a divorce and you have a buy now pay later product?
So perhaps the husband will keep paying even after the divorce. The two payments, one is the repayment to his wife and another is to the lender. But anyway, coming back to your point, why I mentioned digital lending, I mean, obviously you gave a reference to that, is because I wrote, because I could foresee a lot of things that going wrong in digital lending, though I have a great soft corner for fintechs, that innovation was going wrong. So a lot of innovation is needed, but something was going wrong. And I think RBI will look at financial stability as its core and they will intervene. So मुझे लगता है कि going ahead also RBI will intervene recently you have seen the strong steps against a lot of big companies operating in credit card. They did not think twice before even taking strong actions against one of the largest, payment aggregator, payment company in India. In fact, that was the first Paytm, known as ATM, and who started a QR code and digital payments, right? So I think RBI will intervene as and when they have some thoughts. And I think more actions are going to happen is what I foresee. Simple reason is, I think certain level of financial inclusion has happened, because of which, I mean, more bank accounts, more digital loans. इसका flip side क्या है? इसका flip side scams है, इसका flip side frauds है. So 3 साल पहले 12,000 करोड़ के अमाउंट के फ्रॉड हुए थे, इस साल 35,000 करोड़ के फ्रॉड हुए हैं, which means that the amount is also increasing. So RBI will intervene. So I think every BFSI company needs to prepare and, should have strong guardrails, because regulator will have to protect the customers ultimately.
So does it mean it will increase revenue for compliance and law firms?
Without saying, I'm sure you will host another party at some bigger place maybe next year.
Okay, that moves us to, the third question. I think the audience here is well aware, and many of them are not just struggling but also trying to understand what DPDPA Act entails and a consent manager. In interest of everyone to understand, there are broadly four things. While speaking around DPDPA Act, one needs to understand. One is the data principles, that's all of us whose data is around there. Another is the data fiduciary, the largest banks and the payment system. Third are the data processors, as Amol rightly pointed out, the fintechs. And finally are the consent managers, which are the new species of regulated entities that you will see around in the ecosystem. So pertaining to that, the question is, with the DPDPA operationalizing a consent first architecture and formalizing the consent manager framework, how do you see financial institutions recalibrating customer journeys, data pipelines, and risk models by 2026? Do you expect consent managers to become strategic partners in the BFSI ecosystem, or will they remain compliance utilities?
I think that's a very broad question and an important one. But let me clarify one thing, that please remember, friends, that I don't run any company. I'm a journalist. I just meet people. I learn from them. I write. I read, and that's where my observations comes into the picture. The reality today is everybody has tons of data. In fact, if you download any app, even if you want to download an weather app, it will ask you permission for your pictures of your phone and your contact details. As if the weather company is going to give you weather indications depending on your contacts and photos. What does that mean? In fact, every startup fintech company, as soon as you download an app, they need some 100 permissions from your phone. आप कहाँ पे रहते हो से लेके आपका weight कैसे चल रहा है, all these details, which means that every BFSI company, including banks or a fintechs or a startups, have so much of your data. The question is, what will they do with that data? इतना data है उनके पास कि भी data center के bill उनके बढ़ रहे हैं, and they don't know what to do with it.
If you allow me, I'll just give you an anecdote. I think the lawyers out here must have heard it.
Yeah.
So Justice Sri Krishna was heading the committee while this bill was being drafted. And I remember him speaking at the annual general meeting of the Bombay Chamber of Commerce. So the joke he said is, while he was growing up, he saw in his village that the elephants used to walk and poop. And there used to be a person walking behind the elephants to gather those poop and keep it in a basket. So when he asked his mother, why are they doing that? So his mother said, it's very precious. So he said, all humans, or rather, what they say, the data principles, are pooping data here and there is someone just running behind to capture those data without even knowing the significance of those data.
Exactly. In fact, I can give you a great example, that every bank, every insurance company, every NBFC, everybody has so much of data that they really don't know what to do with it, because the data is not segregated. Until and unless data is not segregated, data is not synchronized, they cannot even develop an AI applications on that and find a greater solution to that. So what happens then? any customer goes to a bank, usko insurance becho, mutual fund becho, credit card becho, travel card becho, without you knowing whether he needs it. It's as simple as that. You are also giving a marriage proposal to a person who's already married. At least ye to pata kar lo whether the person is unmarried or married. I think even that
there are too many dating sites these days. This proposal does work at times.
So I think we have learned a lot from GDPR. I think that was one of the strongest law European Union put in place. We woke up really late. I think we took some 7-8 years after GDPR for a country like 140 crore people. But nonetheless, we are here. It's going to be tough for every company and specifically for bank and finance companies. They will need different officers, chief data officers, chief consent officers, and everybody. There are different frameworks which has come in, account aggregators and all. But whether the consent mechanism will actually work, how will it work? I think a lot of deliberations should be there. Lastly, I think on this part, bill is fine. All the suggestions and everything looks nice, but I think they should have a committee which is open 24/7. Anybody has any questions should go, and there should be deliberations.
Just the way I think IBBI was running under MS Sahu.
Yeah, in a way, yes. In fact, the similar thing happened with GST as well. Initially, when they launched it, there was a team of people who could answer the questions, right? And they were ready to rectify then and then. If that won't happen with this particular project, I don't think this will be a great success then.
Okay. So now moving to the fourth question and some data points for everyone around here in the BFSI sector. Approximately 10,000 NBFCs are registered with RBI. NBFC loan growth has been 24% in 2023-2024, 17% it has dropped down in 2024-2025. RBI roughly cancels 30 to 50 NBFC certificate of registrations annually. For 5 years, NBFC's count in India have hovered around 9,000 to 10,000. Out of NBFC layers, upper layer, middle layer, base layer, middle layer has the highest lending services. So these are few data points around the NBFC. So the question pertaining to that is, with regulatory tightening and convergence with banking norms, how must NBFCs reshape their business models to remain relevant and profitable?
I think that's a very pertinent question. If you have more than 9,000 NBFCs, if you look at the active NBFCs or as RBI says, systematically important NBFCs are very less. Usme bhi deposit taking NBFCs and non-deposit taking NBFCs are again differentiating factor. But I think the question should come now is out of the 7,000 to 9,000 NBFCs, how many are serious NBFCs? Because you cannot make a bank overnight, but perhaps you can become an NBFC overnight. So that's why a lot of people took licenses of NBFCs.
I completely disagree. There may be many people who would have applied their license and may be holding for 11 months. And there is a unique animal called Prava, which is almost like a faceless tax assessment. So people don't find it overnight, as in
maybe 2 years, but at least bank takes 20 years. So that is still a smaller window. My point is, I think those NBFCs who have obtained the license or those who are in the business, I think they will maybe perhaps go back to drawing board and decide whether they want to continue in this business because compliance is going to go up. And I mean, a lot of real estate companies, for example, floated NBFCs because they wanted to lend to their vendors, right? So are a serious lenders? The answer is no. They are there for very minimal.
They are the CIC.
Yeah, exactly. So I think that is one. Second is, I think everyone should look at that one statement of former Deputy Governor Rajeshwar Rao. He says, if you walk like a duck, if you quack like a duck, if you talk like a duck, we will treat you like a duck.
Good one.
Because you can't say that, okay, as a regulator comes, no, I'm not an NBFC, I'm not doing this, I'm not doing that. I give you two great examples. I have interviewed so many NBFC players. Is the real innovation happening in NBFCs? Yes. But is it happening with many? The answer is no. It's happening with very, very few. I think NBFC should get into different segments. Can someone imagine that an NBFC can lend to a person who wants a very small ticket size loan for a stem cells when his wife is going to deliver a baby? There is an NBFC who delivered a product dedicated to stem cells. They partnered with the stem cells banks in India. How small that segment could be. And they started disbursing loans at zero interest. I don't want to name, but that is the NBFC which is having a AUM of 4 lakh crores today. The largest NBFC in country. Bajaj Finance. Now everyone says why Bajaj is big because of such things. Now there is another NBFC which is the new age NBFC has developed a product you can't even imagine for dedicatedly treatment of from the Ayurvedic doctors. So for example, somebody wants taking a treatment for Ayurveda for a diabetes reduction or something like that, and she goes to maybe some Ayurvedic placement or something, Ayurvedic clinic, and the cost is 3 lakh rupees. There is a 0% EMI loan is available to that person. And by the way, that NBFC is making a business of 500 crore every year from this segment, which no one could think about. So I think these new segments should emerge and NBFC should actually innovate in this side rather than doing BNPL. I think because there is a lot, there are so many entrepreneurs. I belong to Maharashtra. My village is in I hardly go there, but my village is in the Western Ghat near Sangli. And there are so many people who wants to do small businesses, but nobody is paying money to them. Nobody's even under the, what you can say, the government's mudra, they didn't get the loans. Because
but the mudra size is quite big.
Size is quite big, but that's happening at some pockets, not everywhere. You know, अब प्रॉब्लम ये भी है ना कि वो छोटे से डिस्ट्रिक्ट के छोटे से तालुका में वहां पे 5,000 15,000 लोगों को 50,000 का लोन देने में वो ब्रांच मैनेजर को इंटरेस्ट नहीं है. Who will do that so much of work, underwriting, risk, अगर उसने दिया नहीं तो जाके recover करो. So, make it short, I think NBFCs have a great future. There are no more shadow banks at all. They are very much in light. Regulatory is also allowing them. If regulator allow them to do a co-lending, which is with the banks, I'm sure Ravi sir is here and they will have all the details about it. I think regulator is pushing that. Please remember, journalists are not very happy with the regulators. We do a lot of negative stories, but on this particular part, I think they have allowed a lot of. They have done a lot of job here by allowing them co-lending, partnering with so many fintechs, and this. I think they have a great future. NBFCs. They just need to develop innovative products.
Oh wow! So that's a very positive outlook around NBFCs. You know, now moving to the second last question, let's also cover the payment landscape in 2026. So I think you must have come across a recent news where Fiserv, a major payments tech company, isn't selling its entire business, but is strategically divesting its fuel payments division in India to focus on core growth areas like Clover and Carrot. IMF has just recognized UPI as the world's largest real-time payment system, capturing a staggering 49% of global transaction volume with over 129 billion transactions. That's more than Brazil, Thailand, China, and South Korea put together. That moves us to the question, do you agree that customer acquisition is plateauing in payments? Where do you see the next wave of innovation, monetization, and competitive differentiation?
That's a detailed one, Omkar. I think must say that the payment story has given an identity to India, right? Nobody could imagine that even youngsters and old people and everyone could do UPI payments as easily as we are doing now. Nobody could thought about it, and I think that's gave a that redefined actually India's finance story, right? Again, I don't have the data points, but UPI story abroad, other countries are using it, embracing it. That is happening. That is in the process. It's not. I don't know. There are no case studies where it's happening. I still can't send money to one of my friends in Singapore, but that will happen one day. I think where
I think PACBs will take that lead soon.
But I think where the payment story is going now is one day the fintechs and everyone will realize that the acquisition cost is very high. Transferring payment cost is also very high. Now they're asking government to maybe reimburse the cost, right? But they can't make money here. The only way they can make money in payments, because I have met a lot of fintechs and payment heads in cross-border payments, I guess remittance is a huge opportunity and everybody is working at that direction. I guess cross-border payment is one big area, and that is not just for India. I think every country is trying hard. MS from Singapore was trying very hard to solve that problem. I think they solved it with Thailand and Indonesia as of now. Indian companies like, Razorpay and, Pine Labs have already went to Singapore and opened their offices there. They're trying to open in Dubai, and because they think that this is the bigger opportunity. So I think cross-border payment, and specifically when it looks to normal payments, B2B payments is the only place where I think they can make some money. But I think B2C is still, I don't see people will pay, to transfer the funds. I think we are very happy with, sending money freely here and there.
So you mean the competitive differentiation has to move from B2C to B2B? So moving to the last question before the rapid fire round that I have with you.
Okay.
Uh, on the back of your insights on regulatory evolution, market dynamics, and fintech innovation, what would you recommend as the top 3 to 5 legal, regulatory, or governance frameworks that Indian BFSI entities should prioritize implementing or advocating for in 2026?
As I said in the beginning, I'm a literature student, and initially, and then obviously now I can't separate myself from the banking, finance, economy. I mean, still go back to literature. But the point I'm trying to make here, Omkar, is simplicity is the key. People at large do not understand basic things. Many senior citizens do not understand the difference between BMAP and QR scan code and what is the digital payment. They do not know it. They don't know what OTP is. And I think we are not giving them an option. We are literally not giving them an option. If you go find any senior citizen going to a bank, he cannot even update a passbook because the branch manager will say, "Kya bahar ATM hai, wahan pe passbook update kara lo." Passbook ke piche barcode laga hua, but that person cannot do that. Then he will request a security guard. Security guard perhaps will help him. And sometimes I feel, don't mind friends, but in the PSU branches, the most hardworking person is the security guard. He knows the forms, checkbook sign का कौन सा भरना है, application किसको कौन सी देनी है, and the brand bankers are interested in only selling insurance and mutual funds. So I think while the digital journey is important, we need a simplicity for people at large. Being a journalist, I receive so many complaints and queries from, यार इस बैंक से मेरा इतना पैसा कट गया, मुझे नहीं पता है कैसे गया करके. How many people understand the difference between redemption, repudiation? How many people understand, despite paying even 50,000 rupees for a health insurance policy, that, okay, these are the things covered and these are things not covered? How many people can proudly say that, okay, sum assured ka itna mujhe milega? I think those loopholes sometimes I feel are created by choice. I think those we have to, remove it somewhere. We have to abolish it somewhere. Otherwise, same Indigo story. In fact, my joke on the Indigo was, very soon they will also charge you money to see the cloud outside the window. they charge for everything. So I think simplicity is very important in the financial, because otherwise what will happen now is, I think we still managed, and we kind of, we didn't have a choice, so we accepted whatever it was, whatever the insurance gave, whatever the bankers gave. But the new generation is, okay, you're not going to give me, I don't need you. They will go to a digital apps. They are very okay to bank with a fintech app than going to a branch. So the biggest challenge for these all companies will be to convert the 5,000 square feet of branch into a 5-inch smartphone. That's it. How do we do it simply? That's their headache.
Yeah, I think that's why, companies like Revolut and Tide are heavily catching up in a country like India. So moving to the last segment, I think you must have caught many regulators off guard, for which they would not have liked you. So I would do repeat the same with you. So it's a quick rapid fire round with you. You have hardly 10 seconds to answer them. Two bankers want to go out to a restaurant. Where will you take them?
It now depends on whether they are one PSU bank.
One word answer, please.
Bombay Coffee House in Belad State.
What is the biggest gossip in the BFSI corridor?
Where is the depositor?
According to you, which financial player is going to be axed by RBI next?
Why did you say axed?
Tell us one truth, one lie, and allow us to guess.
I think it's hard. There is growth and there is no growth.
Which is your favorite city in India?
Mumbai.
If you weren't a journalist, what would you be?
Writer.
Your top 3 predictions for BFSI and Fintech in 2026.
Again, I think this is really remarkable one, the last one. And I think the first thing that will happen is everybody will slowly realize that they have to serve the customers. Otherwise, customers will not take care of them and customers will keep on moving. So that is one, customer service, a reality in customer service. Second, the worst part I see is whether BFSI companies or fintech, everyone will do starting from 2026 is it's a rise of new economy and there will be a lot of charges they're going to impose. User fees, subscription charges, service charges, convenience fees, platform fees. I think all these things are going to go increase because all these fintechs will have to make money. So that's where they will make money from. I think that is second. And third is IC consumption is picking up. That's the 3 things which will ultimately benefit the BFSI or fintech. But these are the 3 trends that I see.
Thank you so much. I think it was a very interesting chat, and thanks again for flying out of Bombay to Delhi just for this fireside chat. Thank you so much, Amol. Thank you.
Thank you. Thank you.